Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I call it the warning flag is up. And we're going to get to that in a minute. We're going to start off with the ETF dashboard showing the summary for the week ending August 6th, Friday, August 6th. Then we're going to take a look at the Dow Industrials Elliott wave picture. We'll look at a couple of indicators. Check in on Apple and Tesla, and then I'm going to talk about this big divergence that I'm seeing that I think is a big warning flag. All right, here is a quick summary of the 16 sectors I track every week. The traditional S&P sectors plus some of the subsectors in here. This week, 13 of them were up and 3 down, so a lot more strength kicking in versus last week. And, with the leader to the upside was NASDAQ Biotech, 3.8%, and right on its heels with financials. The weakest sector was staples. And again, there was only 2 other ones that were weak, retail and telecom, but retail continues to be the leader for the year. And then when you look at the indices, the strongest was the Russell 2000 in a pretty good move, but they were all positive for the week. All right, let's take a look at this Elliott wave picture. Right now, I keep looking for, some kind of wave count that says the end is imminent in here. It's like the last week or whatever, but I just don't see it. I've tried to say from this significant low on June 18th, is there a way to count this last little move up in here as a final 5 wave? I just don't see it. So to me, it looks to me like we've got a little more work to do to finish off. We're looking for 5 waves to finish off this 5th minor wave, which will finish off the 5th intermediate and the 5th primary wave, okay? And so basically the entire cycle coming up from March 2009. But right now, it looks like we've got a little more work to go in here in order to finish off that 5th wave. Let's take a look at the VIX. The VIX this last week, let me go this view, this one I like, got a pretty good collapse here the last 4 days. I mean, just when we think it's getting ready to turn and rip higher, it tried to get above that 20 level on Tuesday and just got rejected and came right on back down. This is the lowest close on the VIX since July 2nd. So pretty significant little pullback in here. It could just be like it's trying to reload. We'll see. I mean, every time so far this year anyway, when it's come back down into this territory, it has tried to reload and launch higher. Now, it took a little bit more work to do that towards the end of June, so we'll see what we get here with the VIX. The next one I want to take a look at is the high yield bond fund. I think I looked at this last week, but the thing I want to point out here, the significant point, is the divergence that's shown up since July 7th. So, the markets, it doesn't matter which one you're looking at. The S&P 500, which is trending higher, the Dow Industrials that we just looked at, the NASDAQ Composite, where is it? It's right up here. This is slightly trending higher, but there's divergence showing up all across the board in here with the high yield bond fund. It was down slightly on Friday, but for the week, let's see, it was down 46 cents. So here's the weekly view on it. And you can see there's that divergence I drew on the daily. And here's the weekly view. We're up in that territory where we were back at the top, February, March of 2020. So we'll see what kind of follow through we get from here. Does this continue? Does this continue to break down? Okay, I want to take a look at a couple of stocks, and then we're going to go to that major divergence that I was talking about. First, I want to pull up Apple. Okay, Apple has been a little bit of a problem child for me for the last few months, several months actually. I really thought I had a big top coming in here and we had a nice 5-wave move down, and I thought we were working our way down in a much bigger C wave. But then you just can't deny what's going on in here in terms of the price action, the way it turned right in here in May and into June and turned up. So I'm giving the bullish count the benefit of the doubt. And right now, this looks to me like we've got a triangle sideways in here for wave 4. But where this is, fails is if we come down here in what looks like a potential little E wave. Okay, if we get below this point right here, which is 142.54, then something else is going on, and it could be a much more negative picture developing. And I do have another account to it, but there's no point in going into it until this starts to break down. So right now, this is the picture I've got on Apple. It looks like one more leg up in here, and it's just really a question of how strong will that move be, what kind of move, of course, assuming it does turn and head higher. All right, so that's the picture I've got on Apple. Let's take a look at Tesla. Okay, Tesla, I've got in a big corrective move. I am expecting this thing to continue to come down in a large cycle wave 4. Tesla's had a huge move, as we all know. And I've been talking about this for on and off, if you've been following me for a long time, updating the Tesla chart. And right now, I'm still looking for this to come back down. But, and it had a down day on Friday, down 15.53. But I've gotten this move in here really took a lot longer and got more complex than I ever thought it would in terms of the second wave, So right now I'm looking for this to continue to come down. If it turns and punches above this high, what is that high? What, 726.94? So let's just say 727. If it punches above 727, then you got to sit back and say, well, maybe something else is done. Could it be that the A, B, C is really complete here? It's very, very short in the big picture of everything. Very, very abbreviated move for a wave 4, cycle wave 4, because I believe we had a cycle wave 3 complete here with a big 5-wave move. But here's the thing, when you get into corrective actions, corrective moves can be very complex, and they can take longer than you ever thought that they would. So right now, this is the picture I've got. Here's what I'm looking for. And if we continue to come down, break this trend line, we should really start to accelerate to the downside. All right, that's the picture on Tesla. Now let's go. I want to take a look at this this big warning flag that's waving. Okay, here's what I'm talking about with the warning flag. This is a comparison of a weekly chart between the Dow Industrials and the Dow Transports. The Dow Transports peaked on the week of May 9th. And the Dow had that same peak in here also, and it's like they were staying in sync for a while, but this divergence has crept in as the Dow has continued to push higher, the Dow Industrials, but the transports have continued to trend lower fairly significantly. So right now, between this peak and where we are with the Dow, we are 12 weeks. And I've got it ... because it could be 12 weeks and counting, or it could be that we're there, that it's 12 weeks. But, again, the big question mark about that is I just don't see the Elliott wave final picture in here. That's why I'm saying that, this is a warning flag. It's telling us that something is not right. Let's go back and take a look at several of the market peaks. And I'm going to go back to 1987. Okay, here's the 1987 crash. And you can see we had a whopping 2-week divergence in between the Dow Transports and the Dow Industrials at the top. And after that, they were dramatically in sync with this complete crash. So, here's where the Dow Transports peaked the week of August 9th. And you can see where my cursor is over in the Dow Industrials window. It's, the cursor's in sync time-wise. So there was only a 2-week kind of caution or warning when you look at this indicator. But let's go take a look at the top in 2000. Okay, the top, 1999 into 2000, quite a bit different story. There was a divergence of 35 weeks. From the peak in the Dow Transports the week of May 10th, 1999, to the peak of the Dow Industrials the week of January 8th, 2000. 35 weeks in here. And, again, very dramatic sell-off here with the Dow Transports. So a lot more time evolved in there. So 2 weeks in 87, 35 weeks in 2000. Let's take a look at 2007. Okay, here we are in 2007, and the peak occurred in the Dow Transports the week of July 14th, 2007. Dramatically sold off. The Dow didn't peak until the all-time peak in here at that high was the week of October 7th. Okay, so we had exactly 12 weeks between the high, which is exactly where we are right now. So it's like, you know, pick your poison. I mean, 2 weeks, 35 weeks, 12 weeks, 12 weeks and counting. That's where we're at. But the bottom line is, the message is, the warning flag is up. All right, that's it for this weekend. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the channel, hit that little subscriber bell. And if you'd like more of this kind of information on a daily basis, head on over to joehenches.net. Check out the website, check out the membership. Everyone have a great week. We'll talk to you on the next video.